Hello, everyone. Thank you so much for joining in. Thanks for your patience. We had a little delayed due to some technical issues. Welcome to India Factoring Chat Show, Factoring one-stop solution for your global aspirations. I'm Vinod Vasan, your host for the day. And we have an eminent speaker today to explain about the factoring ecosystem. Before that, let me take you through India Factoring first. India Factoring offers working capital solutions through their factoring product aimed at converting your receivables into cash. The company is a subsidiary of a European bank, Fimbank PLC Malta, and is registered with the RBI as an NBFC factor. India Factoring is also AD3 category authorized dealer. Through our global network, we offer one-stop solution around receivable finance. Today, we have an amazing speaker on the show who will talk to us about overall factoring ecosystem and solve all your questions pertaining to factoring and your financial requirement towards working capital solutions. Please stay tuned. Let us welcome our first speaker, Mr. Puneet Singh Bhutani, Regional Head and Executive Vice President, India Factoring. Mr. Puneet is a seasoned banker with a demonstrated history of success in the financial services industry. He has over 20 years of rich and insightful experience in banking with an expertise in corporate and retail banking business. He's also an expert in trade finance, international factoring, and corporate finance. Prior to joining India Factoring, he has worked with S Bank as a senior vice president and was managing Central and South Delhi territories. He has also worked with HDFC Bank and managed branches across Delhi, Punjab, and Haryana. Welcome to the talk show, Mr. Puneet.
Thanks, Vinod. Very good afternoon. Good to be back.
Yeah, good afternoon. So I'm excited to start the show. So let us start. So India merchandise export touched a record high benchmark of 418 billion for last financial year 2021 to 22, compared to the last previous financial year export of 292 billion, which is 2021 financial year. So this is a huge, significant increase in export volume in India, and we are seeing all our customers are adapting this trend, and also across all segments, export volume is growing. So we would like to understand how factoring plays their role in this kind of scenario where the volume of export is growing across sectors and people are require various cash flow and related challenges. So please let us please explain us how factoring play a role in this scenario.
Sure. So yeah, like you rightly said, exports are growing all across different segments. So see, factoring as a product is very different from a normal banking facility. So if your turnover is growing at a very fast pace, you have a lot of purchase order in hand. So you can come to a factor like us and you can request for lines. In case of factoring, the most important aspect is how strength the buyer is. So if the buyer is good, you have purchase order in hand, you can come to factors like us and we can get those lines very easily for you. For us, your last year balance sheet is not that important. For us, important is the credit quality of the buyer. So if the buyer has sufficient credit quality, the strength is there, you can come to us. The turnaround time is faster. Lines can be set up far more easier, and even your shipments the shipments which are prior to the sanction date, those also can get covered. So I think it is the easiest way to get working capital and fulfill your future orders.
Great. Thanks, Puneet. Well explained. So factoring is not just a financing tool. Also, it provides various benefits. So definitely it will be much useful to exporters. So let us discuss on the supply chain related challenges, because now in today's scenario, this is one of the major talking point over the exporters, and they are facing various challenges. And recently we started experiencing again lots of supply chain related challenges. Due to China's zero COVID restrictions have impacted global supply chain recovery, as a small disruption in a country will likely to lead a ripple effect in a global supply chain in the current scenario. So though post-COVID scenario, global supply chain has improved, well during November, December 2021. But still, again, exporters are started facing supply chain challenges, and vessels delays are happening in a much extended period. So what we are currently experiencing is the buyer or extending tenor, because in case the tenor is 60 days, the goods receive at buyer port itself, it's taking more than 60 days. So many buyers not willing to make payment before the goods reach their port. So the tenors are getting extended. So in this kind of scenario, how the exporters can get support from factoring products.
So these are all the practical aspects of trade which we have been observing, not from only from last 2-3 months. These are going on from maybe I would say last 8-9 months. So this container issues have impacted, I think, the trade all over the globe. So yeah, we have solutions for such issues and many other. So in specific to answering to your query, the sellers can come back to us because in this particular scenario, the payment terms would get extended. Say, for example, the payment terms were 60 days. Now, due to all those delays, the payment would come with a delay. So once the buyer and the seller have consent, we can arrange specific approvals and the payment terms can be extended and working capital can be provided to the seller for such delays also. And not only these specific issues, can be other issues also. So which are well understood. These are all practical aspects of a trade. So we are very much connected to our correspondent banks abroad, and we tend to provide those solutions to problems which seller face, like this what you said, container issue. So yeah, these are well understood, and help is provided in a timely manner.
That's great, Puneet. So good that in factoring, based on the buyer and seller consent, the tenor can be extended. That is much benefited to factoring the exporters. Also, as a continuation to this question, I'd like to add another point. So generally, in traditional bill discounting facility, they operate with fixed tenor. In case the tenor is 60 days, the bank right away on 60th day, they will penalize the seller with the penal charges. But in factoring, non-recourse factoring, the exporters are assigning and selling the invoices to the factoring company. So in this case, on due date, exact due date, will the seller get penalized, or factoring company will take responsible to collect the payment from the buyer?
As the name of the product goes, it is a non-recourse export factoring. So even if there is a delay due to X, Y, Z reason, there is no penal which is charged, because once an upfront payment has already happened to the seller, and the balance which is expected to come on due date, but if there is a delay, that is guaranteed by a factor. So there is no penal interest unless and until there is a dispute. So disputes are not covered unless there is no dispute. So there is no penal interest in the non-recourse export factoring transaction.
Okay, that is good news, because in the current trade scenario, the general nominal trade delays are much accepted in factoring, whether on the other side the bank go with a fixed tenor. So this is more flexible to exporters based on the current scenario. They can, without any penal charges, they can run their business. Yeah. So another important issue we would like to discuss today, and please give us some more insight in this point. This is a raw material challenges, because we are experiencing as initially we have seen the export volume is growing in a significant historical level, and definitely the related to the growth, there are other challenges. We have discussed about vessel supply chain. So now raw material is another main point. We are seeing raw material vendors are asking immediate payment or advance payment from the exporters. So there is a temporary cash crunch, because all these vendors used to give tenors 30 days or 60 days of credit period. So now, due to the starting from yarn or steel raw material, so there is a demand due to the slow global supply chain. So one side, exporters are seeing a good order book from the buyers. On the other side, raw material vendors are asking for the immediate payment. So how they can get benefit from factoring products?
So, see, to understand it, we need to go how factoring is assessed. So clients, sellers can come to us for a larger amount of working capital requirement just on the basis of a purchase order, which normally doesn't happen in terms of bank, because bank would do some assessment on your last year balance sheet. Basis on that, basis on some collateral offering, they would offer you an X limit. However, factoring, like I said earlier, is based on future purchase orders. So if you have larger purchase orders in hand, and also the turnaround time is less. So if you get more orders, you can get more lines at a client level also and at a buyer level also. The assessment is fast. So if you have more receivables, you can just convert them into cash, and maybe you can use that funds to get raw material. Maybe you can get discount on, if you have more cash, you can get more discounts on your raw material purchase. So the whole aspect of factoring is early cash and future projection based lines which are readily available.
Thanks, Puneet. Well explained. So factoring is based on the future order. That is good news that exporters are getting assessed based on the future order, not based on the past performance. And you have clearly explained, and it is the right time that exporters should get into the factoring. Because the volume is increasing, but raw materials is a challenge to manage the cash flow. So this cash flow will help exporters to increase their operating cycle to do more business to catch up their market position. So that's a good news. So we have now discussed various the current scenarios globally happening, and now we let us take it to some more development happen in insurance segment in India. So IRDA new insurance, we have seen the Insurance Regulatory and Development Authority of India on September issue a revised guideline for trade credit insurance with an aim to promote the sustainable and healthy development of trade credit business in India. So also there is a good news that India Factoring is one of the few initial financial institution in India got approved to start finance backed by credit insurance scheme as per the new trade credit policy. So please throw us some light on this matter and new development happened in IRDA guidelines, and how our exporters will get benefit on export and domestic business as well.
Sure. So this was one of the things which was long awaited by all the FIs in India, and like you rightly said, we are very happy to confirm that we are one of the first financial institutions in India to have our own trade credit insurance policy. So it opens up lot many things in terms of our buyer coverage, because we right now work on two different models. One is a model where we are engaged with our correspondent banks across the globe, which provide credit protection on the buyer. And now this is the second option. This increases our coverage. Now we can cover a large number of countries across the globe because we have our own credit insurance policy. So the horizon gets broadened, the coverage is more, so more support to sellers. And in fact, due to now this credit insurance policy, we should be in a position to offer non-recourse domestic factoring facilities also maybe by next quarter. So that again is maybe we should be one of the first to launch such products in Indian market. So I think good times for sellers, both exporters and domestic also. So once this domestic non-recourse factoring comes into place, it will add a lot of value to the whole supply chain cycle.
Okay, so that is really a good news that even domestic suppliers also get factoring. And another good news is India Factoring is starting their initial product in India to offer domestic players. So we can see lots of improvement in the current months in this in the topic. So now various. Sorry. Yeah. So now various. Yes, true. So various current topics we have covered. So let's discuss on various benefits on factoring and how this will get a benefit for the exporter. So, what are the benefits of factoring as a overall, and any specific point of time, any right point that the exporter should get into the factoring? So, please give us more insight in this matter.
The benefit of factoring can be immense. It depends upon what exactly a particular SME, MSME, or a corporate is looking for. So, very basic benefit is for a MSME, SME would be a working capital. Working capital that too without any collateral. So that is one of the very basic. So now, if you come to a maybe a mid corporate, they would like to maybe reduce debt on their balance sheet, because factoring is just converting receivable to cash. So if they want to reduce debt on their balance sheet, maybe they want to go to some increase the capacity, do some capital expense. So they can come to a factor and convert debtors to cash and maybe reduce their bank borrowing, which is debt. A large corporate may just like to take factoring just to ensure that there is no risk on the debtor side. So they can come to us for only that offering. Another benefit would be collection. So if you are an exporter, you are exporting to multiple countries, there are multiple time frames and language issue. So you can just come to us and along with the funding, collections can be managed. So this is one of the, again, benefit which is used by our clients. Then once you have those cash in the balance sheet, it reflects a lot of ratios improve on your balance sheet. So there are multiple benefits. It's up to a seller how they want to use factoring for their own purpose. One can also use factoring to acquire new clients. Say somebody is not comfortable working with a Latin American buyer, somebody is not working comfortable doing a business with a South African buyer. Somebody wants to do business only when there is an LC or there are no side payments. But the buyer is saying payment 90 days, 30 days. So they can come to us, get those buyer assets and acquire new clients also. So many benefits across, I think, client segments.
Okay, so thanks, Puneet. Well explained. And actually, this is factoring is not just a one benefit. So, as you explained clearly, it is a one financial product coming with the various benefits of credit cover and operating in different time zone, improving balance sheet. So definitely, this is not compared to traditional banking. There are various benefits in a new age factoring. So thanks for that. So as I mentioned, traditional banking, we'd like to understand more from you how traditional banking product differ from factoring products.
Sure. So see, in a bank, once the limit are sanctioned, they are sanctioned on basis of your financials. Maybe last 3 financials, they access your last 3 year balance sheet, and then maybe they will analyze what's the working capital gap, and also they would take collateral from you. Then your debtors are hypothecated. Here your debtors are not hypothecated, they are sold to a factor. Then mostly the banking lines are secured by a way of guarantees or a collateral. Here it is nothing like that. And then maybe you can say in working capital facilities in a bank, there are no collection services which are provided. So here you have an expertise factor who can collect on your behalf. So we have heard feedback from our clients. Then on few occasions, they are able to maybe free a lot of manpower once the collection aspect is shifted to a factor. So these are all various things which are there available with the factoring solutions. However, they are not available with the bank. A bank would charge you a penal interest if the payments don't come. The penal interest can be as high as maybe 2-3% over above the bank rate. However, in the non-recourse facilities, there is no penal interest. So, moreover, the turnaround time for assessing a bank limits are far higher than assessing of a factoring facility, because here the more the credit analysis happens on the buyer. It's not on the seller. The focus is on the buyer-seller relationship, the transaction aspects. So I think lot of differences between a bank finance and a factoring facility. Lot of value adds, I would say.
Yeah, thanks, Puneet. Very well explained. So the bank product and factoring has various difference, and even factoring has got various benefits. And now we have a viewers question as well. Thanks, Chobi. So this is a question to Puneet. So the insurance cover now being available to Indian lenders and borrowers, whether it would cover risk within India or overseas as well.
Yeah, yeah. So this is a global trade credit insurance policy now which we have onboarded. So the risk is covered globally. That includes India. That is how we would be in a position to offer non-recourse domestic facilities in India also. Maybe the product should get launched maybe next quarter itself. So yeah, we will cover risk both India as well as outside India.
Great. Thanks, Puneet. And another viewer also raised, thanks, Prabha Murugan. Sir, you said India Factoring would be the first institute to have a trade credit insurance product. I would like to understand if it's underwriting trade credit as product by India Factoring or as a broker you will be working.
No, so these products are backed by trade credit insurance policies which we have. So yeah, understandingly, the risk would be covered by the insurance only, but it would be we who would be running those facilities. We would do the assessment at a buyer and seller level, but yeah, ultimately the risk is covered by the insurance only.
Okay, thanks, Puneet. I hope it was answered to the viewer. So next, we have clarified earlier the difference between bank product and factoring product and various benefit of factoring as well. So and end of the day, the customers and the manufacturer, they look for the cost involved. So that is anyway, they are doing a business and they need to work out costing within that. So please explain us how costing work in factoring to understand the export as well.
Sure, sure.
Yeah.
In factoring per se, cost is dependent on multiple factors. One factor can be buyer risk. Second factor can be a country risk. Third can be a performance risk. So depending upon all those three parameters, a costing can be arrived at. But when I say total cost, so it's very much competitive for good buyers, good sellers. The factoring cost is very competitive to even the bank finance. However, once you are assessing the difference, you have to see the value add which is the factoring product provides compared to a bank finance. So if you compare all those aspects, I think factoring is the product to go for.
Okay, thank you. So good that the factoring product comes with the competitive pricing, so the exporter will get benefit out of it. And we have another viewer query from Vinod Chaube. And would the premium charged by the insurers in India be competitive with the overseas factors? What is your opinion?
Yeah, thanks for that question, Vinod. The premium is close to whatever is being charged by global insurance. It is very, very competitive. So this is a competitive world. There cannot be much difference between the offerings by those global banks and insurance and liability in India. Very competitive.
Okay, that's good news. It's very competitive, and we have discussed various segments of companies are using. So we would like to understand. There are each segment, MSME, large, mid segment companies, and each and every segment company's requirement is different. So how they are getting benefit out of it? Are they using factoring for the same purpose, or each segment of client use this product for various purpose? So please explain us.
Yeah, sure. See, for a medium and enterprises who just maybe started few years back, they would not maybe have a collateral at hand. So they would not have that access to a bank finance. So they can come to us and we can sanction facilities based on a buyer's strength. So that is what an SME, MSME would use factoring for. If you get to a corporate, maybe they are at a very mid corporate, they are at a very growing stage and they want to increase their capacity. So they would like to use banks for maybe those term loans. For all their working capital requirement, they can come to us. Because in non-recourse export factoring, in India factoring products, we don't have any fair limit bondages where we can't sanction a higher amount. So we are open to higher lines also. So those corporates can approach us, use their banks for those term loans and maybe additional products, and for working capital, they can come to us. If you go one up higher, maybe these days, because these are very uncertain times, there are war happening, a COVID situation coming again, supply chain constraint. So maybe a corporate wants to ensure that their debtors are secured. So they can use factoring facility only for ensuring that their debtors are protected to an extent of 100%. In our case, we pay 90% upfront payment and 10% when the buyer pays. If the buyer doesn't pay, if they default, then that is also guaranteed, which we pay to the corporate. So those large corporates use us only for protecting their debtors because they don't want any risk to that aspect, because their turnover is huge. Even if one debtor goes bad, it's a huge impact to the corporate. So yeah, multiple benefits for multiple different categories of companies.
Okay, thanks, Puneet. So it is good to know that each segment are using factoring for various purpose. And also another best part is you mentioned it is covered 100% credit covered, which is normally not happening in regular insurance covers. So very well explained, Puneet, all over the queries. And thank you, Puneet, for joining us and sharing your insightful thoughts on export factoring business and its various benefit to exporters. And thank you all. Hope all questions were answered. If you want to know more about factoring, please log into our LinkedIn page or our YouTube channel, or alternatively, you can connect with our direct number available in our websites. I'm signing off. We'll be back shortly with another interesting topic. Thank you.